Hello everybody, it's Tortoise Investing coming at you with another one. Very quickly, if you are new, please hit that subscribe button. That would be super awesome. Join the 245 that have already done so. Super free, super easy to do. And make sure to hit that like button on those videos and comment down below. Let me know what your biggest holding is. You can let me know what you've been looking at, what you've been buying. I look forward to hearing from all of you. So without further ado, let's go ahead and jump into things. So starting off, little channel update here. On Mondays, I'm going to be doing Stock of the Week from now on. It's going to be like a little episode series. Wednesdays, it's going to be top 5 stocks that you can buy and hold forever now. That's going to be changing week to week, obviously. There might be some repeat stocks here and there, depending on if they go up or down, but definitely going to try and keep you up to date on 5 amazing deals that you can look forward to every week. And on Fridays, it's going to be there'll be like portfolio updates or just something else, some other news that I find interesting and might want to talk about. But without further ado, let's go ahead and get into episode 1's United Health is our stonk of the week. This has been all over the place this year. It has been as high as 526 and it's been as low as 460. Now, the thing that I really like about this and why this is our stonk of the week is it has amazing growth. After all the chaos that everything's been going through over these past 5 years with the recession of 2022, the COVID hitting in 2020, and the inevitable recession that we're more than likely going to have this year, stock is still up 101%, and at its peak, this thing was up almost 130%. Got to love that. Let's take a look at it through Qualtrim so we can see what we're looking at here. So it's got a free cash flow yield, 5.11%. It's got a PE ratio, for those that look at that, of 21.6. Trailing 12-month PE of 22.15. So they do have a lot more cash than debt. They got a... You always like to see that. When that green bar is bigger than that red bar, they doing something right. You like to see it. Dividend yield of 1.35% and a payout ratio of 30.22%. So that dividend yield is not... That dividend is not in any danger whatsoever and will continue to see rapid growth in the future. So let's go ahead and take a look at the annual revenue growth here. Literally just a stair-step ladder for the revenue, for the EBITDA. The free cash flow is increasing. The net income's increasing. The EPS is increasing. The cash on hand is increasing. It's starting to outpace the debt, which is amazing. It does have some debt, $54 billion. Their EBITDA is $31 billion. My rule of thumb, as long as the debt is not more than 3 times the EBITDA, that is no problem whatsoever. But they got more cash than debt on hand, so it doesn't even matter. So they are shares. They are doing slowly but surely some share buybacks, which is another thing that you love to see. And the return on capital employed has been the most reliable 18% that I have ever seen. So above 15%, very nice. Very nice. Their expenses, not too bad. It's going up a little bit, but revenue, cash on hand, everything's going up with this. So it's not a problem whatsoever. So let's go ahead and take a look at the dividend. They've been increasing their dividend for the past 13 years. Over the past 3 years, their average dividend CAGR is 15.63%. Over the last 5 years, 17.36%. And over the last 10 years, 23%. That is some amazing dividend growth. So one thing I look at, I like my stonks to be above 10% dividend growth. This is right there. Would you like to have a 15% raise over a 3-year period every year from your job? I know I would. So a very quick dividend grower indeed. Now we're going to hop on over here to TipRanks. TipRanks is a little analysis, stock price prediction, forecast type website that I like to look at from time to time. So they do look at got some top analysts here. They have 14 total ratings, 13 buys, 1 hold. The average price comes out to $601 over the next 12 months, which is 24% upside. You know, this is what the analysts say. And I mean, it is an amazing, reliable stock. It is one of the best healthcare stocks out there. So, yeah, and I mean, it shows there. It's getting a strong buy from the people that this is their jobs. So we'll take a look at some recent news for a minute. This is from about a week ago. United Health first quarter earnings, revenue up, and the company has added more members. So, still growing. Love to see it. They have an earnings beat, and the stock is lowered. So, that is something that has been happening this year. For some reason, a stock will come out with right at earnings or beating earnings, and it still drops. It's just been a really, really crazy year. But when it comes to this is definitely a buy and hold and let it compound holding. I like what I see with it. Very, very reliable. Very, very reliable. But yeah, guys, that is a quick look at United Healthcare Group, the ins and outs, the numbers, the recent news, the stock analysts forecast. Let me know what you think about it down below. And yeah, hope you enjoy. Make sure to hit that like and subscribe button. And until Wednesday, see yins.